Avalanche is beating Ethereum, and it's doing so on many kind of different levels. On price performance, obviously, but also in terms of total value locked, in terms of technology, as in how many transactions can it perform, in terms of the ecosystem. We're going to look at all of those things. This is not just a random hype video. We're just trying to hype up Avalanche. We're trying to look at this objectively and stick to the data. But of course, the problem is always when there's a crypto winter, when there's bearish momentum, everything is going down, Bitcoin, Ethereum is going down, then Avalanche is likely going to go down as well due to correlation, right? The prices tend to go down for any alt when there's simply no risk appetite in the market. So in this video, we're going to look at a trading strategy to bet on Avalanche while canceling out the general crypto sentiment. So we look at an approach to really bet on the outperformance and to still get a positive return when all of crypto tends to go down. So this is not just a simple buy Avax strategy. This is a strategy where we delta hedge using another cryptocurrency. So in this case, Ethereum. But first things first, why do I say that Avalanche is beating Ethereum? That's mainly because the total value locked is over the long term declining for Ethereum against a lot of competitors actually, not just against Avalanche. But Avalanche is at the top. So this chart over here starts in August of 2020, goes all the way to today. And at the beginning, Ethereum, in terms of total value locked, was more than 95% of the overall smart contract space. Nowadays, Ethereum is only 60%. All of that other market share went to the competitors. For example, the Binance Smart Chain, Terra Luna. And at number 4, we've already got Avalanche. So the momentum is definitely on Avalanche's side. And we can also see this when we dive directly into the total value locked statistics. So this is now Avalanche, the TVL. Of course, there's some kind of a dip happening here, right? When all of crypto is going down, the underlying ecosystem tokens of Avalanche, shown over here, they are declining as well. But this decline is even worse for Ethereum because look at this. We did get some kind of a retracement in the last months. That's less visible for Ethereum. For Ethereum, we are going pretty much straight down. And I do think this kind of a trend is likely going to continue. If you've ever used the Ethereum blockchain, if you've ever used the Avalanche blockchain, you will notice this night and day difference, right? When you do a single, very simple transfer on Ethereum, such as an approval or disapproval of a token spend, you can be paying like $4 or $5 in gas fees. With Avalanche, that's only 20 cents or so, maybe even less, depending on the time of the day. So if you've got the choice, if you've got an alternative decentralized app, or maybe even the same decentralized app being deployed on Avalanche, it's very likely you're going to prefer that. Here, let's look at the Ethereum ecosystem dApps, decentralized apps. We can see over here on what kind of chains different applications have been deployed. And of course, Curve Finance is available on many blockchains, and some dApps, they're only available on Ethereum. That's not a problem though, because very often we've got forks, we've got derivative applications that still run on Avalanche. And over here, Aave is Avalanche compatible. MakerDAO has been cloned quite often. Wrap Bitcoin is available on Avalanche, on Phantom, on basically any competing layer 1. And so it goes on, the decentralized exchanges, the leveraging platforms, the borrowing and lending platforms, they are available on Avalanche, or a derivative thereof is available. And how is it possible that so many decentralized applications get copied that easily to competitors? That's because of the EVM compatibility of Avalanche. So what does that mean? You can directly copy over, you can directly clone over your project from Ethereum to Avalanche or to the Binance Smart Chain. Same goes for Phantom. It's not true for Terra Luna or Solana though. You can directly use your existing code, your existing Solidity smart contract code, and deploy that same application, maybe with a twist, on those comparatively cheaper smart contract blockchains. And so that's exactly what's happening. A lot of people simply fork the code from Ethereum to Avalanche, to Phantom, to potentially Harmony One, simply to gain market share from people that don't want to spend hundreds of dollars on gas fees, right? If you don't move around thousands of dollars with every single bet, then you can't afford to be very actively trading on the Ethereum blockchain. Now, before we dive into the trading strategy to bet on Avalanche while Ethereum continues to lose market share, before we dive into that setup, let's look at comparative price performance. Over here, we've got just Avax in US dollars, right? And very often, as said before, we see a lot of correlation within the crypto space. So when we've got a big depression here in Avalanche, that was at less than $10. During that time, we also had a depression here in Ethereum. And we had that same depression also for Bitcoin. So it doesn't really matter what kind of crypto chart you're looking at. When you look at the US dollar chart, you're looking at very similar chart patterns. It's not that different to analyze the Ethereum chart versus, say, the Avalanche chart. It's pretty similar. And so what we actually want to look at, we want to look at relative performance. How does Avalanche outperform Ethereum or Bitcoin? And so we can simply do that. This is the Avax chart divided by the Ethereum chart. You can simply enter this into tradingview.com, just enter Avax USDT /ETH USDT, and you get this kind of a chart. You can do this with any pair, right? You can do this also with Avax versus Solana, for example, Avax versus Cardano, Avax versus Polkadot. You can all do this. And what we notice when we just flick through those charts is that Avax, relatively speaking, is now comparatively high. So there's another video. I will link to that video during the outro of this video. So at the end, you can click on that. There's another video that focuses on the technical analysis of Avax currently. Short-term, Avax might be comparatively expensive. And when you just want to bet on this short-term and keep this position open for maybe a few days or a few weeks, that kind of a trade might not make so much sense. But if you're looking at this long-term, and if you think maybe the Avalanche inflation, which is relatively high at around 30% per annum. That's quite a lot of additional supply hitting the market. If you think Avalanche can outpace that, the adoption will be quicker than that inflation, then long-term, you might want to set something like this up. So the idea is that in the end, Avalanche can still outperform Ethereum. But of course, one thing to note is there is easily downside potential of, say, 25% or so first, right? The overall crypto market currently looks comparatively bearish. There's not a lot of bullish momentum going on. There's not a lot of new people entering the space. Thus, the risky Avax might, in the short term, maybe trade in this sideways trading range. But over the long term, it's very much possible that in some shape or form, this price will continue to outperform Ethereum simply because Ethereum is continuing to lose market share and it goes to its competitors, and Avax is one of the main competitors with one of the most developed ecosystems, right? Over here, we see the number of protocols. That's just a fancy name of number of decentralized applications. Of course, it's the largest for Ethereum, but look at this. Avalanche is at 170. It's got 1/3 of the applications of Ethereum, but less than 1/10 of its total value locked. So I think given that Ethereum's gas prices are so high, that the momentum is against Ethereum, and that there's way more code deployed on Avalanche in relation to its total value locked compared to Ethereum, that more money is likely going to continue to flow from Ethereum to Avax. The move both for developers with the EVM compatibility as well as for the users with the MetaMask wallet, the move is very, very simple. You just change your blockchain and that's about it. You don't need to install any new wallets. You don't need to learn any new code. You can simply just switch over and save a lot on gas fees. Now here's a way how we can set up this trading strategy. But one more thing first, in case you haven't yet subscribed and you enjoy this kind of videos, feel free to do so because I publish videos daily. Now let's jump in. In essence, we want to bet on Ethereum falling relative to Avalanche, right? We don't really care about the US dollar valuations. We simply look at relative valuations. And we want to set this up in a decentralized way. So we're not going to go to Binance or to KuCoin or to FTX, any centralized exchange. We just want to do this directly by interacting with the blockchain, directly by using decentralized apps. So we can click here in Avalanche and we can see the different applications they have. And when you look at this, the two major borrowing and lending platforms are Aave and Benki. Trader Joe is a decentralized exchange, so that's where you can swap your tokens. Curve Finance is a DeFi application that allows you to get yield on your stablecoins. It also allows you to swap stablecoins very, very cheaply. But let's look at Aave and Benki. So this is Benki. Over here we see a supply and a borrow tab, and we see a total APY. So how much return do we get by lending out our cryptocurrency? That's the supply APY, or how much do we have to pay if we borrow in a certain cryptocurrency? And so what we can do is, say we are betting on Avalanche outperforming Ethereum, is we could buy Avalanche. We could deposit that Avalanche over here. We would get this supply APY of 7.5% per annum. And then we could borrow Ethereum, or in this case, wrapped Ethereum, for 2.4% per annum. So you'd be paying 2.4%. You'd be making an income of 7.5%. So being open on that position actually pays you money. You don't have any financing costs. You're actually getting paid to do this. Now, when you borrow, you're borrowing denominated in this wrapped Ethereum. So say you're borrowing one wrapped Ethereum. In a year from now, you have to pay back one wrapped Ethereum plus this little interest over here, right? So when the Ethereum price goes down, then you can pay back that loan way easier, right? So here's what you got to do exactly. You have to deposit some kind of collateral. You can do this with Avax. You can also do this just with stablecoins. You deposit collateral, and with that collateral, you can now borrow against that. You open up a loan in wrapped Ethereum. You then sell that wrapped Ethereum. You get proceeds back, right? You sell this either against Avalanche or against a stablecoin, and then you deposit these proceeds again here on Banky to continue to get some kind of a return on this. You can optimize the return somewhat, right? So these proceeds that you get after selling the Ethereum, you could also put them, for example, in an auto compounder such as Beefy Finance. But this goes beyond this video. If you're interested in that, just let me know in the comments. I can make a separate video on this. But the most straightforward way is to simply, after selling the Ethereum against Avax or against a stablecoin, to simply deposit this here as well and gain an APY. Once you want to close that position, you simply revert all of those transactions. So let's say Ethereum now falls against Avalanche. In that case, you would swap your appreciated Avax back into Ethereum and pay back that loan. And then you will have something left over. That's then your profit. Now, you might want to fine tune that strategy somewhat because there's some kind of inherent leverage in altcoins, right? The altcoins, they move more than the very large players, right? When, say, Bitcoin goes up by 5%, Avalanche is going up way more than that, and vice versa, right? When Bitcoin or Ethereum is going down by a few percentage points, Avalanche is likely going to go down way more. There's simply leverage in here. And you can actually measure that leverage. And there's a video dedicated to measuring exactly that leverage, and then to find out what are the proportions of what kind of position should you go short in Ethereum versus long in Avalanche. You shouldn't probably do this in exactly equal valuation, because then when the overall crypto market is going down, then your higher levered Avalanche is going to go down further. So you're not completely delta neutral. You want to somewhat balance out that market risk. And in order to find this out, like how much inherent leverage is there currently in Avalanche versus Ethereum, there's a separate video here on the premium membership of Bitcoin Strategy, which can be found here in backtesting with Microsoft Excel. That's the video risk-adjusted returns, calculating alpha and beta. So you're looking here for the beta, right? You're looking for how much more does Avalanche move relative to Ethereum. So this is the video. We're basically creating a scatter plot over here, derive a regression line, and then determine the beta based on that. That's a bit more advanced, but if you're interested in that kind of content, feel free to check out the bitcoinstrategy.com, the premium membership over there. There's also a private Telegram group where you can ask me any questions. So that's in the end how you all set this up. Make sure you compare rates though, right? You have to compare your supply to borrow rate. So you're supplying some kind of collateral, you're borrowing something, you get a delta out of that, your financing costs basically, and you want to calculate that kind of a delta for different borrowing platforms. You want to check this out for Banky. You also want to check this out for Aave, right? The second of the major borrowing lending platforms here on Avalanche. If you want to take on a bit more risk, right, we take on more smart contract risk in case we take smaller platforms. You can check it over here. Again, on DeFi Llama in the categories tab, we can go here to lending and then further filter this down by the blockchain, in this case Avalanche. What we see here, we've got Aave, we've also got Iron Bank. Iron Bank typically has very, very good rates, by the way. So you definitely want to check that out. And then we've got Banky and the others I haven't tried yet, but feel free to do so. always check the total value locked, right? You probably don't want to get into something that's only got, say, 2 million value locked, right? Rather stay with the larger players, because the smaller you go, the more risk you have. Smart contract risk, risk of being rug pulled, whatever it is, that additional risk very often is not really worth it. If you're interested in a more deep dive technical analysis of Avalanche, feel free to check out that video over there. And of course, you can also join our free Telegram groups shown over here. So feel free to become part of our community. Be careful though, there are people that impersonate me. So people that message you directly, that pretend to be me. I will never message you directly. I will never ask you to do any kind of crypto transaction by reaching out to you or showing you any kind of platform. Same is true for any comments or messages here under this video to write to any WhatsApp number, right? This is all scams. Don't fall for it. Thanks for watching and see you next time. Bye-bye.